You paid GST rupees 18,000 for business purchase. Do you think that the entire GST you can claim as input tax credit? The answer is definitely no, because there are certain conditions to be satisfied to claim input tax credit. Certain exempt items are there. Personal use is not allowed. There are certain formalities to be completed by the supplier, and certain details have to be reported in the GST returns. Without that, you cannot claim the input tax credit. So in this module, let us see what are the conditions for claiming input tax credit. I hope you know the meaning of input tax credit. So say for example, a registered dealer is making a purchase for 18,000. This he can adjust with the GST what he is collecting when he is selling the item from the customers. Imagine the 25,000 he collected when he sold these items. So input liability, input GST is 18,000, output GST is 25,000. So net effect 25,000 minus 18,000, rupees 17,000 only they will be paying as input tax. They can adjust that. So the balance amount rupees 7,000 only the dealer has to pay to the government. So this will reduce the cascading effect, tax on tax. This is the major advantage of introducing GST in our country. Now, sections 16 to 21 of the CGST Act 2017 is giving the provisions regarding conditions for claiming input tax credit. First point you have to remember, if 18,000, see, if GST you paid is 20,000, 70% you have used for business purpose, 30% is for personal expense, personal use. That meaning 20,000 into 70 by 100, 70 by 100, only 14,000 rupees, 14,000 you can claim as ITC from GST. The balance is used for personal purpose, you cannot claim. Similarly, taxable supplies and exempt supplies also. Take the same example, 20,000 is the GST you paid, 70% is for taxable supply. That meaning rupees 14,000 GST you can only claim. Exempt supplies you cannot claim the ITC. Then the time limit for claiming that. See, the time limit is November 30th or the date of filing the annual returns, whichever is earlier. So financial year 25-26, by November 30th, 2026, ITC can be claimed. Then the 180 date payment period you have to see. That is, after getting the invoice within 180 days, you have to make the payment. If you are not making the payment, you are not eligible to claim the ITC. That meaning it will be added to the output liability, and the penalty, interest penalty also will be applicable. But later if you are claiming, if you are paying that 18,000, whatever the GST you have to pay, then that can be re-availed provided it is fulfilling the conditions of the GST Act. Then the supplier has to give the details. You have to receive the items. You have to receive the items. This should be reported by both the parties in the GST returns. See, that is why every business should check always GSTR 2B to check that whether the supplier is entering the details, they are paying the correct GST to the government. These conditions are to be fulfilled. These are very important. Then only they can claim the ITC. And don't think that whatever tax GST you paid at the time of purchase as a registered dealer, you cannot claim that. You have to see that these conditions are fulfilled, then only you can claim the ITC credit.